Hello, we are at the Future Hospitality Summit here in Nairobi, Kenya, at the Radisson Blu, the only country, the only city with a national park. And today we are joined by Andrew from CBRE, which is one of the top 200 Fortune company. How are you, Andrew?
I'm good, and how are you?
Yes, I'm fine, thank you. How's the experience so far at FHS?
It's good. It's always good to attend this. There are a lot of investors, a lot of brands, a lot of operators, and it's the networking that we really come for.
Exactly. Again, capital follow systems. And quick one, what does CBRE mean in full for our audience?
Globally, we trade as CBRE, but for in full, that is Cordwell Bankers Richard Ellis. It's a group that's been around for over 100 years, and our name is a result of several mergers and acquisitions.
Oh, wow.
Yes.
So, for context, what do you do in the space of real estate and investment?
Yes, so I'm in the capital markets team, and what we do is we start with advisory because it's very important to get the right data, the right information. So we'll do feasibility studies.
Correct.
And then off of the back of feasibility studies, we help our clients raise cap debt. It could be either debt or equity. So talking to the banks or different investors to make sure the project gets funded. And then at the tail end of the process, we help with transactions if you want to sell. So that's what our team in capital markets does. But CBRE is an end-to-end service provider. So we do valuations, leasing, property management, construction. Basically, if it's in real estate, we do it across. In Africa, we're in 38 countries, over 2,000 employees like myself.
Yeah.
And with big support from our sister companies like Tan and Chancellor, and Profca.
All right. Interesting. So, what's your objective today? Who are the key people you've actually met, interacted, and how is the market responding to CBRE today?
Okay, our objective as always is just to connect good people to other good people. So it's been nice. We've been able to introduce our clients to some of the brands, and that's very important. And just to introduce some to continued conversations. So we have a few engagements with a lot of the people here. So it's a good time to touch base and link people who would not otherwise have been in the same room together. Yes.
Yeah. So I just wanted to get some few context and insight. What are some of the challenges that investors who wants to purchase property in Africa? So what challenges do they face?
I think it's just information asymmetry. So investing in Africa sometimes is very difficult because you don't have the right data. And without that, it's hard to make a good informed decision. But the benefit with us is we have most of the team is actually homegrown. Like for example, I was born and raised in Nairobi. So a lot of our teams, we have a very minimal expatriate staff. So these are people who've lived in the country. We know the policies. We know how things work, and we have the added advantage of connecting that with global best case practices. So if you partner with like a firm like ours, the benefit is we are able to give you the right insight, and with the right insight, then you're able to get very good investments that meet your return. Yeah.
Actually, you said something interesting that has caught my mind. It's lack of industry information and lack of data. And also this is something that actually informs policies when it comes to investment. And data has always been an issue in the African continent, also Kenya and also South Africa and other North African countries. Why is it getting proper, relevant industry information so difficult?
So it's a maturity thing. So where we are, the market has since the 2000s, the market has been maturing. So there's a lot more data there. There's a lot more insight in the market. But the thing is, we also are a mature and emerging market. So at the end of the day, the people who record it, the professionals who are able to provide that data haven't existed in the past. Not to say they won't exist in the future, but that's just what's held us back. I think one of the key things is just the lack. REITs, for example, are a very good way to open transparency in the market, because when it's listed on a stock exchange, we get annual reports. There's compliance in terms of reporting, so there's a lot more market transparency. We've seen a lot of traction. CBRE was involved in the last helping in the valuation for the last Kenyan REIT. So if we continue with the same pace, and we've seen if that continues now regionally, then we get a lot more data. And then that now helps influence the decisions and the policy.
All right, interesting. So within the African market, so which countries are performing so well when it comes to investment in real estate?
I'll admit my bias being in Kenya, but it's also something you see in the data. East Africa has been lighting up because strong real GDP growth coupled with reasonable inflation and stable currencies. It makes East Africa, and that's now your Kenya, Uganda, your Tanzania, Rwanda, and Ethiopia, make some very good investment destinations. Because also there's kind of stability in the policy. Now that's a market that we cover very well. I'll also say in West Africa we've seen growth in Abidjan, Dakar, in the French-speaking part.
Yes.
Accra and Ghana and Nigeria have always been strong markets. And then, of course, South Africa has always been a dominant market. So there are about 16 or so active markets. And that is really what drives investment.
So actually, as we wind up, we talk about West Africa. Let's go to the Middle East. We understand we're having instability within the Middle East and the Arab Emirates. So how has that affected the property markets, knowing that it's considered as a haven for the rich people? That's where they invest in real estate. How has it affected the real estate market and also its ripple effect to the African continent?
I'll just start off by saying that any instability is just never good for investment. And what we'll say, we really do hope for a quick resolution to everything that's happening there. But in terms of ripple effect, you'll find that the increased cost of fuel is not good. It increases costs across the board. That will have a ripple effect, especially over the long term on supply chains and higher construction costs, which again reduce your returns. But on the positive side, I will say a lot of the inbound tourism, there's an opportunity to capture some domestic stays that were maybe looking to fly there, so they could be captured by local brands. So there is an opportunity there. Plus, also we've seen this we've seen markets like Zanzibar benefit when there was maybe when there was a bit of trouble in North Africa, a lot of the tourists got rerouted to Zanzibar, and it helped create it as a destination. And now those two markets coexist. So I think it's just a shift in tourism, not necessarily the decline in tourism, but still early days. Look, and we really do hope that this issue gets resolved sooner rather than later.
Very interesting, because actually I saw Trump's speech, and he said within 2 but less than 3 weeks the war is going to be over. So we hope the Strait of Hormuz, the issue is going to be resolved. In fact, also in addition to that, also FHS has actually been affected. We had a significant number of delegates that were coming from the Middle East, so they were not able to take part into this conversation, but they're joining us virtually. And hopefully this conversation we're able to proceed with. So Andrew, parting shot, what do you have to tell our audience?
No, I think for me it's just thank you. It's always good to attend FHS, and we thank you for the opportunity. I think this is always a start of very good conversations.
Correct.
And conversations that eventually translate into buildings, and that's all we can ask for.
And also it acts as an investment catalyst.
Exactly.
Thank you so much, Andrew.
Thank you.
Nice to see you.